How we doing, traders? Welcome to the one, the only Money Mitch. We got a lot to talk about it. Yes, my money mob out there wants to wonder what's going on. What did Biden say? What happened at the market at the close? Where should we go looking for stocks? Right here on Money Mitch. You'll go ahead and find on out. Let's go ahead. Hit that like button. Let's get it started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on, traders? How we doing out there? I know you guys are getting ready to talk about the market. I see people talking about Tyson. Yes, chicken, winner. Where is the dinner? That's what I'm wondering. Chase out here, Gordon, Eric. What's up, Aaron? Hertz, it's good to see you guys all in the chat. I'm ready to talk some stocks. Let's dive right into it. Before we get into the market, though, of course, we got comments today. Biden was live and talking, and the market making significant down move on this comment. You know, we're going to go ahead and speculate a little bit here. But Biden said if Russia makes choice to invade Ukraine, U.S. and Germany and NATO ready to act. When I saw that quote go through, that's when I started seeing the price action on the SPY really turn around in the last 15 minutes here. We're going to pay attention because other comments mentioned also Biden mentioning that they're making kind of plans to be ready if there's an immediate loss of gas in Europe. So this is another thing I think you need to keep on watch. You guys know how we've been watching oil. We'll talk all about that. Let's go ahead. Let's dive right into it and take a look what we saw in the markets today. All right, so the SPY kind of just battling here, not getting back above this 453. 450, you know, was that kind of level that we looked to start getting a little bullish, but really we've been fighting in this area now. The question is, do we come back into this chop zone and ever test down towards these 428s? I think, of course, that could definitely happen if we do go to war, or if for some reason we get a bad CPI number on Thursday. Yes, guys, keep that on watch. We got CPI inflation data going to be coming out on Thursday. I'm going to be paying attention to that, just like I know you guys will, and we'll pay attention to it here on Money Mitch. Let's take a look at the sectors. What is doing well? Of course, energy. You guys have known that these energy names have been doing really well. Chevron Group was one that I was looking at on Friday. That one's already made a significant move. We traded it on Friday, and it's continued to make that move on up. We were looking to maybe see a potential turnaround on this day with OPEC, but OPEC, what? They kept the gas on. The light on the oil names, and as you guys can see, it's definitely continuing to push. And I mean, comments like what you heard out of Biden today, where they're planning on potentially, you know, if there's an invasion of Ukraine, potentially maybe an immediate loss of gas. So that could cause spikes even further in oil. So I say you continue to watch the oil names. They're definitely strong. Basic materials today, silver up 6.38%. Of course, you guys can keep a watch on names like AG or MAG if you want to watch the silver trade, but definitely a good pop today. We'll see if gold kind of follows. It did 3% today. Last time we had a big pop, which was this big green candle that you see here. When gold popped last time, it was also popping with silver. We'll see if gold can kind of continue to just move on up, get back above this kind of 840s here on my index. We'll see if gold can really start ripping. You know, if it gets up in this area, I'm going to start looking for maybe potentially calling some longs in gold. But for right now, I think it's just setting up the play. Let's wait for the move, and we'll see what happens. Copper continuing its move. FCX was one that we've been watching. We've been kind of trading it on the way back here on this pop. I'm actually going to be really putting an alert here at 39.50s for us here. We'll be alerted on live trading if we do get this break above that 39.50 again. You know, last time we traded this was around Wednesday last week when it broke through that level. I'll be looking for that same level to break through on FCX, and we can see copper continue to move. Steel is a decent play. I had a play this morning that I wanted to keep an eye out. It's not steel, but it's a manufacturer, ATI, metal manufacturer that's been just holding its trend after its gap on up. I'm going to keep an eye on this one because this one just kind of show me that there's some strength here in this metal game here. Another one that I was keeping an eye out on today was L-Pro. And why am I bringing up L-Pro? Because it's in the financial services, also did decent today, started turning around. I'd keep an eye out on some of these names. BAC is really the one that I think is leading the game here in the banks, pushing on up there today. Of course, it did pull back a little bit with the market there at the close, but look at this 15-minute chart. Look how we're holding sideways there. I definitely keep my eye out on Bank of America as it's continued to show strengths. And one that's lagging behind that, I feel, is Goldman Sachs. Keeping an eye out on it. It's been making its way back towards that 400. That was when we first were starting to look at this before their earnings kind of came out. And you can see we're almost making up this gap right here. So almost filling that whole gap. We'll see if we can get on up there in Goldman Sachs and get up towards, let's see here. We got up there towards about the 375 area. We'll see if we can get up there and close that gap on the daily chart. All right, guys, industrials, let's go ahead. Let's get into the reopening plays. Let me talk about the swing trades I got on. In a few, we're going to be getting into it we got an interview today with Thomas J. Hayes, chairman and managing member of Great Hill Capital. So stay tuned for that. We'll get into that at 4:45. But let's go ahead. Let's take a look at some of the swing trades I put on today. So we're going to take a look at the first one, the one that I got stopped out on. Let's take a look at Bkng. I did get stopped out on this one today. Been looking for the Super Bowl trade. I've traded this one last week, got a profitable day trade on this one. But today I was looking for more of the swing trade. We took some entries here at 2230s, 2220s, and then got stopped out here below the low of the day. The intraday was around 2175. I had a stop there around 2170, getting stopped out at the 68s. Yeah, it came back a little bit. I'll keep this on my radar just for maybe getting that Super Bowl type of play. Penn kind of held the gain, so maybe look at that one tomorrow to kind of take out these highs that you see here from the third. If you look at the hourly chart, you can see how you had that push. You're trying to hold above that 48. We'll see if Penn can get riding above that tomorrow. All right, so next reopening trade. I took one here, Airbnb, because I've been watching this one. We took this one off, though, kind of really right out the gates here. We got it on the first pullback. We were looking for a pullback right out the gates here. We ended up getting in here at 157s here, right below it. We're at 156.81s. Now we're closing right about 158s here. So we're looking pretty good in Airbnb as we're already up. Let's see if this one can really start moving. I do like the daily chart. You did get that nice push on up there. Now 160 is the level that I want to see it continue to get above. Once we get above 160s, we're going to get above that 200-day, get really quickly towards that 50-day. And if we could get that curving effect of the moving averages, I think this can get on a lot of people's radars. I did see also lodging move. Reopening trade is on right now. Another reopening trade taken today was AAL, American Airlines. I did get into this one at 1704. We were looking for a pullback on live trading to come back towards the trend line here that we broke out of. You can see in the pre-market, we had this kind of trend line that we drew. We were looking for it to come back into that area. We came back into the 1695s. That's when I took my shot at the 17s. Got 1704 for an entry there. We're going to risk off of the 1675s, and we're going to look for this to keep on going and kind of continue working its way on up. If we get towards the 1850s, that's going to be our first profit. Then we'll be looking to get on up there towards the 20. That's American Airlines. And why do I feel this way? Because we've been talking about it here on Money Mitch. One of the things is we've been looking to see if the COVID numbers coming down month to month, because COVID was so rampant in January, are these numbers going to cause us to look closer and closer at these reopening trades? And you saw today, look at the cruise lines making moves. RCL, we were talking about Royal Caribbean here, and look at that nice little push. CCL also really nice candles starting to push on up. I think this has to do here with the reopening trade. We'll see if these can continue making moves on up. And it wasn't only kind of, let's say, you're thinking here airlines, you're thinking here cruises, you can think here lodging, you can take a look at Hilton. Look at Hilton having a good day. We were watching Hilton to see if it can get back above this level. Nice little level there, starting to push on up there. We'll see if it can keep holding these gains. And this is Hilton here. Another one that I wanted to take a look at, and most people aren't kind of watching this right now, is not only this. Look at this one. Look at USAK. This is a trucking stock. Monster move put in today, guys. I normally don't see this one take that kind of a move, and I'm going to definitely keep this one on watch. We'll look for pullbacks closer towards the 21 area. We're already up there towards 2230s and 2250s, but I'll look for a nice little pullback coming down towards that trend line to try to get that throwback look and then catch this trucking stock. Industrials moving on up today. Another trucking stock to keep on watch that I like to watch with USK is look at Rider System. Look at this one if it can get back on up and moving. If this one can get back on up there, I'll keep a lookout at USAK to see if it can continue to move. But as you can see on Rider there, you have kind of a death cross as of recent. So just keep an eye out on it. I'm not telling you to look at the Rider System. I'm telling you at least keep this one on watch because I see it all the time move with USAK. So I'm keeping an eye out. Trucking was actually in the red today. So this is kind of interesting move there on USAK, but I keep it on watch because these reopening trades, I have a feeling, are going to be the ones that decouple from the market. I mean, if you look at the SPY, going sideways today, not really having a strong day. Then you take a look at those cruises. It's a pretty strong day compared to the overall market. So that's the relationship that I'm looking to start seeing split. So I want to see when the market comes down, you're still seeing these kind of cruise stocks, airline stocks kind of hold or keep coming on up. We'll see if we can continue to see that. All right, time to catch up with the chat. What's going on out there? Rich, Chase, Easy, Aaron, Beach Bum, Eric, it's good to see you guys in the chat. Definitely throw up some stocks if you guys want to get into it. We'll touch some stocks before we get Thomas Hayes on. And looks like we're getting a stock right here by RJCFLT. Don't know this one, but I'll take a look at it here. All right, so it looks like we're in software infrastructure. All right, not looking too bad. At least you did get some bottoming action by the 60s there. I'm not so sure on the story about this one, so I'm not going to go so crazy and calling it here. But just from the levels, you had this strong trend line down that you just kind of pushed on above it. The question is now, do you hold on these pullbacks? Do you come back into this area and kind of hold the 68, 66? That's what I'd be wanting to watch. I'd want it to really get strong on up here towards the next resistance up there towards 76.50s. One thing to keep on watch is kind of the volume. Daily volume did pop on that big pop, but if you can see here, ever since then, we've kind of been dying off on the volume. Let's see if we can get another pop to get up there towards the 15 million if this one can really start trending. To me personally, I think software names and these kind of names right now, you're kind of taking a little bit of a dip by chance opportunity. Really look into these companies to see if there's some profitability or maybe how they're doing on that profitability search. Because I've seen a lot of these software names, and I feel like these are going to be the ones that always get hit the hardest when we see downside actions. Infrastructure is a little bit better than, let's say, application, but look at Asana. It still hasn't come back, and this was a stock that was an absolute monster. Went from 30 to above 140s, and you can see it's still not turning around. So for me, I'm still waiting on these software names, and I would kind of stay away right now. All right, let's go ahead. Let's see what other names are being mentioned. CGC is touching upward support line. Yeah, we could take a look at some cannabis stocks, see if they got high today, But CGC, yeah, just not making the biggest moves right now. I think these are definitely shots that you're just taking. I do like kind of monthly supports. If you can get it down all the way down here, I'd take a look. But that's what I'd say about cannabis. I've seen monthly supports hold, but I mean, that was last year when you started getting mentions of potentially kind of the Safe Bank Act coming out. I think you really need to see kind of the trend change. Just look at the month. Look at this. This is how many months straight down, guys. This is we got 12 months, a whole year worth of candles straight on the red side. I think that's a stay away until at least you see in a kind of a green candle come into here. And then you can start taking a look at these cannabis names. Right now, I think you're just trying to kind of wish upon a star there to see if you can get these. But really, I mean, they're not showing any signs of turnaround. And with midterms coming up, it's not necessarily something that could be obvious that you're going to get something in cannabis. So we'll definitely take a look. All right, what's your thoughts on earnings on Pfizer? We'll take a look at that coming on up towards the end of the show. Daniel, let's keep it going. Michael wants to talk about HUT. We'll talk about HUT towards the end of the show. Stick around. Up next, guys, we're going to be getting into an interview here. We're going to get into an interview with Thomas J. Hayes, chairman and managing member of Great Hill Capital. So stick around, guys. When we get returned, we'll go ahead and dive right into the interview.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, guys, let's go ahead. Let's bring on Tom Hayes. How we doing?
How you doing, Mitch?
Oh,
I saw your comments on Asana and some of the software stocks earlier in the segment. I agree with you. Yeah, I think you got to wait. I know a lot of people want that Asana because they see Dustin Moskowitz in there buying, 20 million a here, 20 million there. But I took a look at it over the weekend. The thing's still trading at 20 times sales, losing money, and it's just not the environment for that just yet.
yeah, definitely. I said you got to look at that bottom line. If there's no profitability, don't go searching just yet. Wait till at least you see some trend kind of change there.
Yeah. That.
All right, let's go ahead. Let's dive into it. Let's talk a little bit about market sentiment. We've been battling here. There's talks of correction, scared thoughts of how many Fed rate hikes we're looking at. What do you see right now in the market sentiment? Are you one of those people that are as far as 7 rate hikes, or are we looking closer more to like 2 or 3? What do you think?
Yeah, I'm going to take the under. I mean, the market's priced in 4 or 5. I'm going to take the under on that, maybe 3. The name of the game here, there was a lot of fear in the market two Mondays ago. It was complete capitulation, complete washout. And the thing you have to keep in mind, and you learn this through experience, I've been in the markets for 20 some odd years now. You're generally not going to get 20% bear market corrections in the S&P 500 without a recession. And recessions are always preceded by a yield curve inversion. The 2-year yield exceeds the 10-year yield. Now, the yield curve has been flattening since June, so we're keeping a strong eye on that, no question about it, but it's nowhere near inversion. And then finally, for a recession, you need 2 quarters of negative GDP growth, and we're expected to grow GDP by 4% this year. So, if you look at last Monday, there were a couple signs, and I was on Fox Business Network, talking about it in real time. One, the put call ratio hit 1.26%. So your viewers are probably familiar with the put call ratio. VIX was at 38, and the AAII sentiment of retail investors was down to 21. And if you look at that historically, that's usually at or near inflection points when the market starts to recover. And now that's exactly what it's doing. You had a quick, abrupt recovery, brought a lot of people in. Now it's digesting, consolidating, shaking out some of the late money. And I think we're going to push higher into that Fed meeting, barring, like you said, some ridiculous thing in Russia or Ukraine where no one is incentivized for that to happen. Macron is flying over there to beg for some gasoline, to beg for some natural gas, and to say, please don't bomb them, because he's, you can't run an economy on windmills and solar panels alone. We're making the transition, but you're still going to need the fossil fuels for the foreseeable future, and I think they're figuring that out the hard way.
Yeah, definitely. Now, one thing that I've been watching is the market breadth, right? And how many stocks are really kind of leading the rally back up, and how many stocks really kind of held us up between this kind of drop. Now, one number that I've been watching is the SMA 200, what stocks are above and below. This number has gone as high as towards 20%. We were at 80% stocks below. Now we're at 28.1. Do you feel like the market breadth is getting a little bit better when we do get these drives back up in the SPY?
Yeah, I like I like to buy the market when the breath is terrible, to be honest with you. I mean, that's when people are getting flushed out. That's when you're getting forced liquidations. That's when you're getting funds blowing up. We by nature are a contrarian group. I know you guys are talking about energy. We were very public in fall of 2020. This is over a year and a half now, pounding the table on energy when Exxon was at 36, 37, $38, pounding the table on banks when Wells Fargo was trading at a 55% discount to tangible book value. That's only happened 2 other times in the history of the company, once during the great financial crisis in 08-09, once during the S&L crisis in the early 90s. And now that all these companies, all these oil companies and all these banks have doubled and tripled, we're actually lightening up on the group while everyone else is getting very, very excited. So we take a kind of a longer term view than probably many of your viewers, but it's been worked very well for us over the years, because when you know what you own and you do some of the work behind it, you can really lean in its size. And that's how you build wealth over time. It's always fun to take trades and everything, but you got to manage your risk. You got to size it small. But when you really understand an investment, then time is your hedge and you can lean in aggressively. And there are a couple setting up right now of the likes that I haven't seen since 2020 with the banks, with energy, that we're now lightening up from.
Yeah, definitely. It actually leads into oil. Oil is my next topic here. It's one thing that I've been watching. I've been waiting for the turnaround, but trying to be patient for it. Right.
Yeah.
One thing that you can't do is be early to the gun, especially when you're looking for a longer timed investment like you're speaking about here. One of the things is not to be the first one to it, but definitely keep your eyes on it. That's why I've been looking at oil. We did see kind of comments come out, and I'm wondering how Russia will continue to affect oil. Could we get maybe oil to $120 a barrel?
I mean, look, anything is possible, Mitch. I'll tell you what I'd be more focused on, which is a higher probability. The probability of a Russia-Ukraine hot war is certainly present, but it's lower probability than what's going to take place in Vienna starting tomorrow, which is the Iran talks are going to restart about getting a nuclear deal signed. And there's a lot of pressure for this administration to get something done with Iran because of inflation. It's very hard to get reelected or for your party to carry seats in November in the midterm elections if you have 7% inflation. So what they want to do, they're incentivized in every way to get something done with Iran. You saw over the weekend removing some sanctions because Iran could quickly put 1.4 to 1.8 million barrels a day back on the market. And that could happen very, very quickly. And you could see $10, $15, $20 come off of oil very quickly. So you got two sides of the coin. Certainly, if you get an escalation to a hot war in Russia-Ukraine, which is lower probability, you maybe do see the triple digits that you're talking about. But on the other hand, you get some type of Iran deal, and then you get Macron over there de-escalating things in Russia-Ukraine. You could take $20 off really, really quick. Now, longer term, although we've been lightening up on the stuff we bought in 2020 in the energy patch that are now up double and triple, if we did get a hard correction in the group, we would be looking to add back, but at much lower levels. And I think if you're thinking about new money into the energy sector at these levels, the only place that looks attractive from our view, you could pick up nickels in front of steamrollers for some of the E&Ps that are already up 200% plus. But some of the servicers have really lagged, and now that the rig count's ticking up, that might be an area of some interest, for people who really want to get energy exposure.
Excellent. There you guys have it. Check that out. Let's go. Let's change wheels here. Let's get into a little bit what I've been looking at since last week. One of the things is I was seeing as January was going to be the worst for COVID, and it kind of was. We saw those numbers really skyrocket in infection rates. Do you feel that we're starting to finally get into kind of a reopening trade? Lodging kind of moving on up, cruises making a nice move, and it just feels like finally we're really getting towards that kind of later innings in COVID. What do you feel here?
Yeah, I think you're spot on with the reopening trade. I mean, there's so many different ways to express the reopening trade, and a lot of them have played out. You've seen, like for instance, Simon Property just reported, and I think they're down after hours. That was a huge reopening trade, but that started again, fall 2020, 2021. So it's a little late. Now on some of the cruise ships I like because they rallied off those 2020 lows. They rolled back over. And I heard you talking about, Royal Caribbean, that's kind of the highest quality, best in class play. I think certainly there's some legs there for the next 12 to 18 months. And probably your biggest upside with greatest volatility and risk is Carnival. But Carnival's not going anywhere. And I think that's interesting. If you have patience, you'll double your money, maybe triple your money over the next 12 to 18 months in a few names like that. And your best play where they've really, in some of these cases, taken on debt on their balance sheets, et cetera, you have to be careful. You want to buy a basket. If you're going to buy some airlines like you saw today, Frontier bought Spirit, ULCC, Frontier. That kind of looks a little bit interesting here. But buy a basket, American Airlines, United Airlines, 3 or 4, and just sit on it for the next 12 to 18 months. And that's how you double, triple your money over time. You just go for the low-hanging fruit. That's a no-brainer. Ignore the short-term volatility. You're in good companies. The long-term track record, you're going to be okay over time.
Love it, love it. We are definitely all about baskets here on Money Mitch, so I appreciate you mentioning that. It's definitely a great way to go about it, especially when one thing that we try to do is kind of move with the story and move with kind of the news flow. You kind of want to get into a couple of names, so hopefully maybe you get a positive catalyst out of one. You can get an analyst rating upgrade, something like that. You can catch something.
I got one that I think is very interesting that's Perfect. Right in line with your reopening, and I think a better way to play the reopening at these levels than at this stage in the recovery. I like Boeing. It's boring. It's done nothing for the last year plus. And there is a catalyst on the time horizon, and they've been, putting hints. Management keeps saying it's coming, it's coming, it's coming. It's supposed to come by the end of the year. We got a plan for them to get recertified in China. We didn't get the recertification. Now they're following the plan. They said they'd be done by the end of January. It's not done, but it's imminent. And when that happens, I think you've got, I think it's moved up from 185 to like 210 maybe today, somewhere in there. Mm-hmm. Where did it close today? 210 or so?
Yeah, right above, right. Closes 207.56, got to a high of 214.
Yeah, so I mean, look, this is a stock. This is still down 50 some odd percent from its pre-pandemic highs. They operate in a duopoly. If you want to fly people around, you're either calling Airbus or you're calling Boeing, and that's a good position to be in because it gives you pricing power. And as we come out of this, as well as I and your viewers know, watching, the first thing you want to do, you're seeing it already. Money spending is shifting from demand for goods to demand for services, which is going to help alleviate some of the inflation pressure and the supply chain pressures as well. But you want to be in Boeing, and this is one you want to take a 24-month view. It probably works out much sooner, but you have a $200 stock that's definitely going to push above 300 and over time make new highs. If it's 2 years, if it's 3 years, the demand is there. And the minute they get that China recertification, that's when you get your first pop. Probably third, when they have the green light to fly in China, maybe you get 40, 50, 60 points in the short term. And then the long term, this thing is just a great play as the demand comes back stronger than ever because people have been cooped up for 2 years. The only thing they want to do is get on a plane and possibly get on a cruise.
Perfect. I think you couldn't have said it better there. Definitely appreciate you bringing Boeing there. Last thing I want to ask is Disney earnings coming after the close Wednesday. Yeah. Of course, we've seen kind of the subscription numbers start slowing down. Netflix got that big hurting off after their earnings.
Yeah.
What do you see Disney kind of lining up here?
Yeah, net ads is the name of the game. You hit the nail on the head. Netflix was taken to the woodshed. Street's looking for 7 million ads. They only got 2 million ads last quarter on Disney Plus. But Evercore ISI was out with a note talking about the Disney Plus downloads have really accelerated in the last quarter. So that's positive. I think the upside surprise, expectations are low with Omicron with the parks. I think the parks are going to be stronger than people anticipate. I think that's going to be a positive tailwind. If you look at the ads on ESPN Plus, were pretty strong last quarter. That may be another positive surprise. Hulu's kind of just floating along there, but we really do want to see those net ads close to 7 million, or it could be punished. But I think again, if you step back, and I know the story during pandemic has been about Disney Plus, and that's kind of like how they held up the stock. But the story moving forward, again, talk about a business with a moat. The parks, people want to get on planes, but where are they going? They're going to Disneyland. Okay. And everyone wants to get to Disneyland. And I think their park admissions are going to go through the roof. And this is a stock to own for the next 12 to 24 months. So like, if you're not in it and you want to be in it, I would never put on a huge position right before earnings. Maybe put at 10 or 20% of what you want to put. If they miss on earnings, you can add a lot more. And if they beat, wait a couple days for it to calm down, and then you can start to layer in and think about it over 12, 24 months. I mean, this is a stock you can hand down to your kids and grandkids. I mean, this is a no-brainer over time.
All right, perfect. Thank you for joining us, Tom Hayes. This is the chairman of Great Hill Capital, guys. I also am going to throw up a link here if you guys want to check out the free stock market newsletter that they offer. So definitely check that on out. And where else can they find you, Tom?
Yeah, just go to hedgefundtips.com. We've got a weekly podcast and videocast you can find on there. It's very popular. It's rated number 2 in the hedge fund category by FeedSpot. And then you'll find all of us. We manage money for accredited investors and large institutions. So that may not apply to a lot of people, but we have a lot of free stuff, a lot of great content that you'll find very helpful, regardless of what level you're at or what size accounts you have.
Hey, well, thank you for joining us. We'll definitely bring you back, and I appreciate the comments, especially about Boeing. A little bonus for the audience.
Thanks, Mitch. Thanks for having me on.
All right, guys, there you guys have it. Another great interview right here on Money Mitch. Like you guys heard, we talked a little bit about the oil game. I like how he brought up something different that I'm not looking at right now, not maybe focusing or not bringing it up to you guys. That's what it's all about, bringing different perspectives right here on Money Mitch. That's why we're reaching out to bring on more market strategists and money managers. So if you guys have someone that you guys want to bring on right here, definitely go ahead and let us know. Last thing I want to touch is maybe a stock or two from the chat before we get on out of here. I did see Boyle mentioned. Boyle, let's go ahead. Let's take a look at that one, see how that's moving on up and kind of holding the game here. We're talking natty gas. We did see that spike. I wanted it to come back on through that 42.60. We came actually down here. We're holding down. Let's get it back above that 42.60 before we get really bullish here. It does look like it pulled back significantly, and you could get caught in the chop. SFT would be the last one here for me. Shift Technologies doesn't not really doing much there, so maybe I'll do one more if I see it in the chat. VLDR, nice after hours pop on Amazon news. All right, perfect. There you go, VLDR. You guys, this is why I wanted one thing this today, and I talked about it. DRIV. Why? DRIV. Why? Because I looked in here and I started seeing what? Oh man, I want some of these LiDAR plays. I want some of these like LAZR, VLDR. I actually looked at this one today. Look how it gets a nice pop. I want to be into one of these ETFs that I at least could have a chance to get like kind of these electric vehicles, these autonomous, these battery plays. This is a good one to take a look at, guys. I just learned about it this morning, but DRIV, I definitely would take a look at that one. Has a lot of good stocks in there. And I'll be watching this one to see how it kind of moves tomorrow, see if it can get a spike. But definitely I'll keep this one on radar. And I think this one's a little bit better than, let's say, if we were looking at ARKK. It's just too much of innovation, too much all around. I would rather just stick to these LiDAR plays, stick to the EV plays right now. And so if you guys want to check this one out, hey, check it on out. That's DRIV. And we'll see what happens. Like always, guys, I'll be right here. Money Mitch will keep working to bring you guys the stocks that you guys want to see from. We'll see what happens with the swing trades on right now. We got Airbnb. We got American Airlines. We're going to look to continue seeing the reopening trade. Be careful out there, guys, with Russia talk. I really do feel that the market's not worried about the rate hikes. The market's worried about war right now, and that's what I think we all got to keep our eyes out on. Comments like Biden mentioning immediate loss of gas in Europe. I didn't expect him to say those comments. We also got the comments of Biden saying if Russia makes the choice to invade the Ukraine, U.S., Germany, and NATO would be ready to act. I think this is a little bit further than just going what we've been seeing. I know there's been talks that, we wouldn't let them kind of just jump into Ukraine, but I also didn't think we would really act upon it. I thought we were going to more along just do sanctions. That was mentioned. But if we were actually to take, let's say, military action, I mean, that's something else, guys. So keep that on watch. Keep that on your radar. We'll see what happens. Give me a thumbs up, and I'll see you next time on Money Mitch all week, 4:30 long, right here on Benzinga's YouTube. Tell a friend. Tell them to come on over. We'll hang out at Money Mitch. See you guys next time right here.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market